Hello, this is Chuck Carnevale, and I'm the Chuck in the Markets Up Chuck. This is the second installment in my popular stock series, where at the request of readers and subscribers to Fast Graphs, I'm going to take a look at the dividend aristocrat and dividend champion Coca-Cola Company. I'm going to take a look through Fast Graphs, the Fundamentals Analyzer software tool, as well as FundGraph, financial underlying numbers, with a focus primarily on dividend and dividend cover. I'm going to start out by looking at Coca-Cola's historical operating earnings growth per share since 1998. And there's a couple of very important aspects about this that I think anyone who's considering Coca-Cola should really give careful consideration to. Number one is, I want you to notice that their long-term earnings growth rate has only averaged 4.4%, but that's an average. Notice that they had 2 years of dropping earnings in 1998 and 99. Following that, through the first recession of 2001, they actually had pretty decent earnings growth. Their earnings actually grew during the recession. Their earnings continue to grow. They came into the Great Recession, and I think this is critically important. They actually had a moderate drop in earnings of about 3%, but when you compare that to the market or most other stocks, Coca-Cola did great through the Great Recession. But then as we came out of the recession, their growth rate kind of re-accelerated again, but really since 2012, 2013, their earnings growth has been flat to negative, although forecasts are for Coke to go back to a 5 to maybe 8% growth rate again going forward. But I do want you to notice that this has not been a great growth stock. Now, as I mentioned in the written part of this presentation, dividends are what Coca-Cola is all about. So next I'm going to plot dividends here. And as you can see, Coca-Cola has increased their dividend every year over this time frame, and remarkably, they've actually increased their dividend every year for over 55 consecutive years. That's one thing that really attracts them. But I also want you to notice that their payout ratio, this portion of earnings, the green shaded area below this white line, represents how much of the company's earnings they pay out to shareholders. And I want you to notice that their dividend payout ratio has routinely been in the 45 to 50% range, but more recently it's ballooned to 60, 66, and 73%. So the company is paying out a lot of their earnings to maintain that dividend growth record. They currently offer a 3.2% yield, and they are AA- rated with 44% debt to capital. So this is certainly a very high quality company. But the other thing I want you to see is what can happen with very popular stocks is I want to bring monthly closing stock prices, and you're going to see some really interesting factors here. If you look back to the 1998-1990 irrational exuberant period, Coca-Cola was an extremely overvalued stock, trading at PEs in the 40, 45, 48 range. And as a result, the stock price really didn't do much for several years from 1998 through 2006. Then it got overvalued again coming into the Great Recession. And like most stocks, their stock price dropped rather dramatically. If you look at the drawdown, as some people call it, Coca-Cola's stock price fell 34% from November 30th, 2007, just before entering the Great Recession, to February of 2009 as the recession was ending. So that was a big drop, but a lot of that can be attributed to overvaluation. But then from another perspective, the company has always been overvalued except for this one very brief period in the throes of the recession. So now let's bring in the normal PE ratio, and you can see that it's a very high number, 24.8. But that's because you had very high PEs here and lower PEs here. As I shorten this time frame, I want you to notice that that normal PE ratio adjusts to something closer to 20%, 19.6. So that's kind of the normal valuation. So perhaps you could argue if you wanted to own Coca-Cola, you might want to be buying it when its price is touching or below that blue line. That's a logical assumption. But earnings is not really the whole story here. So let's take a quick look at operating cash flow, because cash flow is perhaps more of the story here. So when you look at Coca-Cola from an operating cash flow, you really see a better correlation here between the company's stock price and its earnings. So cash flow has been a more important driver of valuation, but once again, because of its popularity, you see that the price tends to command a premium valuation. But I do want to bring viewers' attention to the fact that cash flows have been dropping of late, and they're continued to continue dropping going forward. And when we take a look at free cash flows, we'll see a similar situation where, Coca-Cola is is now a $195 billion company, and free cash flow has been weak as of late as well. So that's something to be really concerned about. When you're looking at pure valuation, it might also be interesting to look at it from a standpoint of EBITDA, and here we actually get a better correlation to value. At this point, based on EBITDA, Coke would look reasonably valued, but that's only based on the fact that the price is touching the orange line. Just as it was with some of these other metrics, you have to consider the fact that EBITDA has actually been in a slight downtrend. The real question is whether EBITDA is going to go forward or not from here. And so let's move to the forecasting calculators. There are 12 analysts that forecast EBITDA growth to be negative this year, followed by about 4% growth next year, followed by about 8.25% growth thereafter. So EBITDA growth is probably okay when you're looking at Coca-Cola, but the forecast growth rate's only 2.7%. So this has never been a real fast-growing company in the first place. But of course, forecasts for growth going forward are still rather benign. Now, if I take a longer-term view, looking at the 3 to 5 year trend line growth, there are only 3 analysts, but they are forecasting 5.5 to 6% growth, 5.85 to be precise. And that would make Coca-Cola look reasonably attractive, but primarily for the dividend yield, not necessarily for a total return investment. This would be a 7 to 8%, 8 to 9% annualized rate of return investment. Now I'm going to move into fund graphs, financial underlying numbers, and take a look at Coca-Cola's debt. I want you to notice that their debt has increased rather substantially in recent years, and it's kind of balanced. The light green area there is total debt, and the dark blue is long-term debt. And I like to see a little more long-term debt on a company's balance sheet than that for my own taste. Next, I'd like to take a look at revenues per share here, and you can see that Coca-Cola had pretty steady revenue per share growth coming up through 2011 into 2012. But since 2012, even though they're generating very high revenues, the growth of those revenues has actually been slowing down. In fact, it's been growing at about 4%. If I shorten it to the last 5 years, it's actually been negative. On the other hand, when I look at the important metric, gross and net profit margins, there's actually quite a bit of consistency here. Perhaps if I draw this as a line graph, you'll get a better perspective. Coke has maintained 60% plus gross margins, and their net margins has pretty much stayed in the 15 to 18% range, although their net margins have been a little lower here recently, and of course that's probably related to the revenue dropping that we just looked at. So the bottom line is, if you look at Coca-Cola from a valuation point of view and are willing to say that it's worth 20 times earnings or 19.6 times earnings, it's currently trading at a PE of 24, which would indicate it's moderately overvalued. You can also see that they're paying out a very high portion of earnings. So the real question is Coca-Cola a good investment today? If owning it, I would say it's not a sell here. I'd be careful buying Coca-Cola today, even though the yield is rather intriguing relative to what treasury bills and so on are offering, or what fixed income is currently offering. But Coca-Cola is certainly no longer a growth stock. It's a dividend income stock. And I believe investors should be fully cognizant of what Coca-Cola looks like on an operating basis before they lay their hard-earned money down. It's a very popular stock. The question is, are people going to continue to drink Coke as well as some of the other many products that the company offers? And that's something that, a lot of people think of Coke as a soft drink company. But if you really look at all of its brands, Coca-Cola does have an incredible array of brands here into numerous other product categories besides just Coca-Cola. Of course, they got the juices, the iced teas, the water, and so on and so forth. Nevertheless, at the end of the day, this is a very popular dividend growth stock, but I think it's a little pricey currently, and I'd be careful if I'm adding new money to Coca-Cola from here. It's been Chuck Carnevale saying thanks for watching.